Gigametals is a name that's been, I've been hearing getting bandied around more and more in a positive way. It seems to be grabbing some attention on some of the chat boards. It's pushing ahead on its Turn Again Nickel project in BC. And here to tell us more about it is Gigametal's CEO, and his name is Mark Jarvis. Now, Mark has more than 30 years of experience. That's a pretty decent amount in exploration and development. And after a career in financing exploration projects as a stockbroker, he moved to the corporate side of the business back in 1996. He joined the board of Ultra Petroleum, which at the time was a small oil and gas exploration and development company with a large unconventional gas deposit. As a director responsible for corporate finance, he raised the equity capital necessary to prove the concept and to establish enough production to finance further growth with debt. Mr. Jarvis became CEO of Gigametal's predecessor company in January 2004. And during his tenure, the company has drilled off a very large nickel cobalt deposit, worked out a reliable metallurgical circuit, and published a preliminary economic assessment. Mark, you've been very busy. Welcome to the Global Mining Symposium. How are you doing today?
I'm doing great, Anthony. Thanks. How are you?
I'm doing wonderful. We've been having a lot of fun and learning a lot, getting some great information. Where are you joining us from today?
I'm in my office in Vancouver.
Okay. Well, welcome from the East Coast to the West Coast.
In sunny Vancouver.
Yeah, it looks great. You can see from outside of your window there. That's wonderful. That helps everyone's spirits during these tough times with the pandemic and all. A bit of sunshine makes everyone feel a bit better. So, Mark, listen, I'll pass it over to you, and you have our attention for your presentation. Let us know what Giga is up to.
Okay, I'll share the screen. I think. Here we go. Okay, so this is a fairly truncated version of our presentation. The full presentation is online.
We're not currently seeing it. Laura, are you able to step in there so we can make sure that we can see it?
Mark, would you like me to share it for you, or if you just click the share screen button at the bottom and then click on your presentation?
Okay, let me try this again.
Sure. Then you just click the share button
screen.
after.
Can you see that now?
No, we can't.
Huh.
It's okay. It's good old technology. But no worries. I can share it for you if you like, and you can just tell me when to switch slides.
Okay, you can share what you've got then.
Okay.
That's too bad.
No worries. Here we go.
Okay, well that's a shot of our camp. If you can just move the slide forward. And again, this is a truncated version of our presentation. You can get the full presentation online. There's a standard disclaimer, and if we could move on. Okay, so our core project is in northern British Columbia. Very large, low-grade, open-pittable sulfide nickel deposit. We've recently completed a PEA that models nameplate capacity of 37,000 tons a year of nickel in a very nice concentrate over a 37-year mine life. So a very significant deposit. And we're talking to potential strategic investors right now. If you could move on then. A lot of you are familiar. I won't dwell on this too much, but the rise of electric vehicles is very important for nickel. Nickel is the part of the battery cathode that stores electrons. It's got excellent electron density. And so if you want your car to go farther on a single charge, you want to increase the percentage of nickel in your cathode chemistry. And that's where all the big research dollars are being spent. The interesting thing about this to me is that if you look at the projections for electric vehicle adoption, you need somewhere between 40 and 70 new mines of a similar size to Turnagain to come on stream by 2040. Next slide, please. Now, the source of these new projects will be a mix, in terms of the known large deposits of the world. There's a few that are sort of like ours, large, low-grade, open-pittable sulfide nickel deposits, but most of them are high-pressure, high-temperature acid leach projects, and many of them are in the coral triangle. And so, the difference is that our deposits are much lower carbon intensity. They're open pit mines rather than strip mines, and we're not, involved in tropical rainforests. In general, our type of deposit is more environmentally friendly. Next slide, please. Now, also in comparison with Hpel, our deposit is what you would call marginal economics at today's prices, but so are the Hpel deposits. And if you're going to see enough new nickel production come on stream for the electric vehicle revolution, the theory is at least that nickel has to move higher to incentivize these projects coming on stream. But what's interesting is that Hpel projects are getting built and have been getting built despite the marginal economics. And it's an interesting question why. Most of these projects are getting built by the Chinese. And, it's my belief that the Chinese are thinking strategically. Internal rate of return is a metric that isn't as important to them as to Western purely capitalist companies. And but what they are doing is they're locking in long-term supplies of nickel at a known price, the cost of production. And since the cost of capital is very low, the metrics about internal rate of return and so forth don't matter that much to the Chinese. They don't matter as much as the strategic considerations. Next slide, please. In our PEA, we modeled our CO2 intensity per ton of nickel. And so the base case is to the left. Now, if we were able to use a fully electric fleet, we could get our carbon intensity below a ton per ton of nickel. That sort of electric fleet doesn't exist yet. However, we think the market is moving that way, and at some point you'll be able to use, electric trucks and so forth. And then we are also doing research into CO2 sequestration in our tailings, which means that we think we can get possibly to complete carbon neutrality. Next slide, please. And here's a comparison. There's been some talk lately about Tsingshan converting nickel pig iron to matte, and then you've got something that could be converted to, the precursors of cathode materials. Aside from the cost and the technical challenges, this would be an incredibly carbon-intensive process, and this compares, the full life cycle of converting our resource to matte compared to nickel pig iron, and the different lines depend on the power sources for whichever smelter we would sell our product to. So we're an order of magnitude less carbon intensity than matte from nickel pig iron. Next slide, please. And here we are in north central British Columbia. We've got access to a deep sea port year round at Stewart. We've got also access to rail lines if we want to ship the product east. Next slide, please. So this high-grade concentrate is something I want to talk about some more. But one of the keys to this, and especially as related to Hpel, is our flow sheet is so simple. crush it, grind it, float it. And compared to the other large low-grade sulfide deposits out there, we have very simple metallurgy. We don't need to have any desliming circuits. We don't need magnetic separation circuits. It's a flow sheet as simple as you can get. And this is both lower cost, but also less technical risk. And our technical risk compared to an Hpel project is, I mean, it's crazy. This is as simple as you can get. Hpel is a great big chemistry experiment. When it works, it works. But oftentimes, Hpel projects fail technically. So, we just think we're competitive with the other large undeveloped deposits of the world. Next slide, please. Now this concentrate that we can make, 18% nickel concentrate, we can do it reliably. We've done a ton of metallurgical test work over the years, but it's also very clean. And this concentrate is the reason that we've been able to attract the team that we've got together now. We've attracted 2 senior executives from Sherritt, and the reason that both of them came is that they looked at our quality of concentrate and went, this is saleable. This is something I can do something with. So Martin Vydra is now the president of Gigametal, and he had a 30-year career at Sherritt, and a lot of that was spent selling nickel and cobalt to end users. So he knows all of the strategics extremely well. They know him, and he's the one that's leading our effort to engage the strategics at the project level. He also brought on board Lyle Tritton, who had a 25-year career at Sherritt, perhaps the most talented engineer I've ever met, certainly. He knows the nickel business inside out and is something of a world expert on Hpel. Both of these people looked at our concentrate and said, I want to be involved. And one of the reasons is, I mean, we modeled in our PEA selling our concentrate to a smelter because that's the market that exists. We think the market's going to evolve in a different way. You could take this concentrate through a simple pressure oxidation circuit and produce precursor metals for battery cathodes that would be a much more direct and efficient route to the battery cathode. So that's flexibility with downstream processing. Next slide, please. So we recently did $6.5 million financing. We've got roughly $9 million in the treasury right now. And we are organizing a program up at the site, up at Turnagain, designed to collect all the data we need to advance the engineering to the pre-feasibility level. And so this is just simply a timeline of that. Next slide, please. So again, with the 40 to 70 new Turnagain scale projects needed in the next 20 years, well, there's not that many projects out there. So something's got to give in terms of nickel price. And, we think we're, one of the premier projects that is capable of supplying nickel to the battery business. And we can do it in a low carbon fashion, which we think will be extremely helpful in terms of the end users and people that buy electric vehicles in North America and Europe are more and more interested in the supply chain that goes into their electric vehicles. They want to be improving the Earth's environment rather than degrading it. So that's the end of this truncated version of our presentation. Open for questions.
Excellent. Great stuff, Mark. Thank you very much for that. Listen, you mentioned this coming supply crunch here, but when is that pinch point on the nickel supply coming? Do you have a read on that?
Boy, that is such a good question. And, and I don't know. I mean, timing is the tough part. My guess is that you're going to really start to see supply crunch 2027, 2028 sort of thing. And I think, you're already starting to see some movement in the nickel price recently because it's not just electric vehicles. President Joe Biden is pushing through this big infrastructure plan, that's going to take a lot of stainless steel.
Yeah.
So it's going to be hard to find enough nickel units. That infrastructure plan, President Biden's in the U.S., could actually move the pinch point nearer term. So maybe 2-3 years out, where things get very scarce.
And do you see, what's your read on this? It's a very good presentation, hit a lot of the big themes, and we'll talk about this with Anthony Maliski coming up next as well. Is it, do you foresee just a dichotomy in the nickel market going forward, where battery producers in China might be taking advantage of Tsingshan's carbon intensive upgrade of nickel pig iron into matte, and then Western producers, they better say no to it. I mean, otherwise they're insanely hypocritical. But is it that kind of dichotomy, or do you think the Chinese battery makers themselves will adhere to lower carbon sources of nickel?
You know, I think with the Chinese, it's cost that matters more than anything. They will probably at least pay lip service to low carbon, but you know, I don't know if they'll do anything significant to improve their carbon footprint. We'll see. I do think that in Europe in particular, they're starting to, track the supply chains. And, cynics would say that cost matters everywhere, and, everybody's going to pay lip service to low carbon and nobody's going to really care. I just get a sense that with the electric vehicle market, and particularly with the high end of the market, that's not true. And I think it will matter if you are sourcing nickel from a low carbon source. In fact, I think there's a real opportunity in Canada to, we should be building gigafactories here. Branded Canadian. We've got high environmental standards in Canada, which is a double-edged sword. It's difficult to get a project going. However, you can get projects going, and there is a route to get a large project off the ground. But the end user can be satisfied that any project in Canada conforms to the highest environmental standards and the highest socioeconomic standards in terms of engagement with First Nations and so forth. So, if you're looking for ESG, Canada is a pretty good country to be based in. Excellent.
Thank you, Mark. We're going to have to, let me bring one from the audience. We're really up against it here, but we have one on the, there's another one just came in. When will we see OEMs, original equipment manufacturers, taking a stake in juniors? This is a good one, to hedge material costs if nickel is that critical. Do you see that happening?
Well, we're thinking soon. The Chinese battery manufacturers, by owning their nickel supplies, or at least China Incorporated at large owning the nickel supplies, they have a competitive advantage because the OEMs and the battery makers, nobody's going to give them a long-term fixed price supply contract for nickel. The only way that they can get that is to do what the Chinese are doing, which is to own a piece of the action. They're going to have to vertically integrate, or they'll be slaves to the spot price of nickel, which, as we all know, can be extremely volatile.
Yeah.
So, the Chinese are building up an immense competitive advantage. And if the Western battery companies want to compete, well, BASF already is competing by tying up nickel supply in Finland. But the rest of the battery manufacturers need to take note. And, I don't know when they're going to do it, but I think myself that they need to do it in order to compete with the Chinese.
Excellent insight. Mark, thank you so much for taking the time to take us through both what Gigametals is up to, but the broader nickel market at large as well. Really enjoyed your presentation.
Thank you very much, Anthony. Cheers.
Have a great rest of the day. Take care.